Alright, let's get this started. Hello, hello. Happy Saturday, happy weekend, happy webinar day, everybody. I just want to make sure YouTube does pull through and start working. Alright, beautiful. Beautiful. What is going on, everybody? Welcome to this week's webinar. The topic for today is going to be on volume profile. I'm super excited for this one. This is a great topic and it's a great tool to help find key levels and key areas when you're trading. Hello, hello, hey, welcome everybody. Welcome, welcome. I'm excited. This is going to be a good one, guys. I'm going to give it just a minute just to let a couple other people join in, and then we'll get started. As you guys see right now, I have ES on the daily, and we're going to start with that. First, I'm going to go over some key points and what volume profile really is. Alright, gonna let a few more people join in. I'm gonna pull up some notes, and what I'm gonna do this time for you guys is I'm gonna copy and paste the notes onto the screen so you guys could screenshot and take the notes as you please. Sort of make it a really good webinar, a really good learning experience for everyone. Let me just make sure. Okay, that's okay, no problem. No problem, no problem. Okay, alright. Looks like we got enough people in here. I do take back what I said about the notes. Is there a correlation between your doggies, yips, and price? Hey, good evening from Chicago. Good evening from New York. Hello, hello. Welcome, everybody. Alright, now that a few more people joined, I will get started. So volume profile, guys, is what you're seeing right here on the left-hand side. And it's basically the volume we normally use down here, but flipped on its side. And this way, we could see what areas, what price levels have the strongest areas of volume and consolidation, and what areas have the most market participants. And that's really important, and this tool really helps if you're a new trader and you're having trouble finding key levels and zones. This is a great tool. Even if you're an experienced trader, this is a tool that I would recommend to use. Alright, so let's get right into it. So, first things first, what volume profile is it reads the chart depending on how your settings are, and if you guys want to stick around later, I'm going to go through TOS and how to set up volume profile. So we're going to want to have it set up so it reads the chart. So right now we're looking at a 1 year and a daily. So it's 1 year span, and the candles are all daily candles. So what I'm seeing right now is I see a large volume spike right here, right? And then it's empty. So we could mark this as a key level, right? And then we see later in the future we did have that consolidation. Now again, look at these huge volume spikes. This level right here, this sort of beige level, is the POC, and that's the point of control. That's the strongest area with the strongest volume in that chart. So this would be a super strong level, and look at that, as we see right here, it even works out as a key level. So we're going to mark this off as well. And then what we're going to do is we're going to look for the next big lump of volume. These are super, super strong, guys, because as price forms and as price moves on day to day, week to week, again, this is something you could use on a smaller time frame as well. You could really get these key levels to line up and work out very well. VPOC is the same as, yeah, VPOC is volume. I believe that is the volume point of control. POC I know as just point of control. There are other terms with volume profile as well, and some of them include HVN and LVN. And what I'm talking about then is I'm talking about high volume nodes, and what we see on each little bridge right here, each grayed out area is a node. So right here we have an LVN. This is a low volume node. There's very low volume here, and as we see, we gapped it and had no stopping us there. So what happened? We have another low volume node. And again, it's an area where price just flies because it uses these high volume nodes as magnets. So once we have the high volume nodes all charted out, and you could do this any way you want. You could see this and you could mark the top right here and the bottom right here to give yourself an area of interest, or you can mark the strongest points and know that this is an area and this could be a key level but with a key area of interest around it, which sort of tells me that price won't react exactly there, but it might react in or around this zone. Just like when we use supply and demand, it won't always react immediately, but it's an area of interest where we're looking for a reaction. And as day traders, we want to trade the reaction. So let's remove this one. How I normally do chart areas of interest and key levels with volume profile is I do use my supply and demand, but for today's webinar, I'm going to be doing it just with volume profile for you guys so you could follow along if you would like. And a lot of times what I'll do is I'll sort of mark where the volume nodes, the high volume nodes start, and then I'll sort of mark where they stop. And what I'm going to do is I'm going to extend these to the left so we can see how they've historically performed. And what that's going to do is, do you guys see what I'm talking about when I say where it starts and stops? So if we're looking at this right here, this big volume node, this big volume shelf, this could be considered a volume shelf right here. Think of it like a shelf because it holds the price. It's a shelf, price sits right on top of it. So we have this volume shelf right here. We come up, we come down, we sort of start holding it. This is a strong area, and as you see, this key level right here, this 40.33, I know it says 82 guys, but when we're trading futures, it's not going to be an 82 or anything like that. Here, we'll bring it 403.525, and as you see, this was a strong area. This is where the volume started to flow in. And this is something that we rejected. So here we have it as resistance, 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 resistance. We broke it, and now we're holding above it. Thank you. Yes, absolutely, guys. It's my pleasure. I love doing these. This is something new that we started with Bullishbrs is weekly webinars, and we're going to be doing it every Saturday at 6 p.m. Our first webinar was on supply and demand, and you guys could find that in our webinar section in our playlists under our YouTube. And the second one was on support and resistance. This one's going to be on volume profile. And I got to see what next week's topic will be. If you guys want to leave any suggestions in the comments, that'd be great. I'm most likely going to be leaning towards maybe pivots, higher highs, lower lows, maybe even like an options basics seminar for you guys. Risk reward, that's another great topic. That's a good one too. But let's get back into volume profile. I don't want to get too sidetracked, just so people could look back at this. So once you are able to recognize where these nodes are, where these key levels are with the volume profile, it's really helpful. I don't want to say it's simple, but it's helpful. It helps to visualize, okay, there was a large sum of buyers right at this area. And as we see, this area is an area where we've had consolidation here, here. And when I say consolidation, a lot of times we'll get a reversal from that. So here we got the consolidation and we pumped higher to this volume shelf, to this high volume node, and then we rejected. Then we came back up to the top of this volume shelf right here. I would consider this the top of this volume shelf, and I'll make that red just so it's different from the others. So that's the top of that volume shelf, and it sort of stayed within it. We came down, we came to the bottom. This is the, what's it called? This is like the bottom. I forget there's a term for it. I'm so sorry, guys. It is in here, though. Volume profile. It is the profile low, profile high, of course. Volume average low, volume average high. Now, normally with volume average low and volume average high, guys, you see how I put a new volume profile study and it gives you one on every single candle now. So there's different ways of using volume profile. And there's ways to use it intraday, there's ways to use it on larger time frames, and just like support and resistance, the higher time frame you go, the stronger that zone is going to be. So we rejected these areas on the daily, right? So on the 5-minute or the hourly, we would see it reject some other type of area of interest or key level or point of control. So let's see. Price sort of faded out down here, so there wasn't much strong selling to continue. So we could have seen that as a sign of weakness to the sellers. And then once we did come back up, again, we range inside these strong volume nodes, because you also have to consider these volume nodes are where banks are putting their buy and sell orders. Just like when we make supply and demand, volume nodes are based off of institutional orders. Retail traders will never have enough money in the world to move markets and, well, just to move markets the way that institutions and banks do. So that's where these volume nodes come in. And what's great is they can't hide their volume. So these will be on the charts. These will be there for us. Do you use, yeah, so I'm using the 1 year, 1 day volume profile. I'm just going to show you a quick example real quick. I'm just going to delete some stuff on here just so you guys get a little gist of it. And we'll go to the 2 year, and what you'll see when we go to the 2 year, you'll see this point of control right here, and I'll even mark this one as the POC. This point of control changes, and the reason for that is we're adding more time to the chart, so it's got more volume to measure in. So once we do time frame, we go to 2 year. It's going to change ever so slightly, but it does still move. So when you are plotting these key levels and these volume nodes and these volume levels and shelves, you do have to be aware of what time frame you're looking at, when you're looking at it. And again, we could look at like a 15-minute, right? 5-day, 15-minute, and we could get what the past week was doing versus looking at the past year or two. And we could see there's a point of control right here, and we can mark this out as a key level. And let's even extend it to the left and see how well this candle did. I want to set this to a 30 and set this to a 30 as well. That way, here we go. So there's that point of control. It also lines up with the top of this volume node. Here's another point of control with the, again, the tip. This is where all that volume was. This is the strongest area of interest. So if you wanted it right here, you could do a rectangle, pull out your rectangle tool, do this, and then you're going to move it about. I always do this little key right here so I don't have to click this one because that just switches it out to a year. So that'll fully extend it for you. Another volume node right here. So we can move this right there, right? And that sort of gives us our ranges. And you see we have this one odd volume node sticking out. We could have marked this as well, knowing that we're just on the 30-day. And again, guys, once you do start going into the smaller time frames, it will start looking a little, I don't want to say messy, but you get a lot more levels and a lot more zones when you go on smaller time frames, and that could really sort of throw you off, but it is good for intraday trading. If you're day trading or even scalping, you do want to go to the intraday time frames. So look, we marked this zone out, and this worked as a great area of support. At first it was resisting, finally broke it, came back, retested it, and we held it. It was an area of support. Now, what we are looking for is we could pull up, let's pull up NQ, and we'll take a look at the NASDAQ and see how NASDAQ's volume profile was, because I know a lot of you also trade the NASDAQ as well. I'm just pulling that up. Perfect. And guys, if you guys got any questions or anything, or if I'm moving too fast, please feel free to leave a comment. I am checking on that, and I would appreciate it if you guys hit that like button and subscribe. It goes a long way. And of course, I'm going to keep doing this anyways. Just a little shout out, a little announcement. So normally we go live on YouTube Monday through Friday for free for you guys. We're going to be switching that to Monday, Wednesday, Friday for free for the YouTube folks. And then everybody who's a member, you guys get full access every day. And that'll be Monday through Friday for you guys. So starting next week, it's most likely going to be, we'll do Tuesday, Wednesday, skip Thursday, and do Friday. And again, what we're going to be doing is we'll be going up on YouTube on private so that we're able to send it to our members so they could go back and see in case they would like to. Alright, so let's hit back to the volume profile. Appreciate you guys letting me do that little announcement. And look at this. So we see how big this volume profile is. Now we're looking at the NASDAQ. Very strong volume. Hey, Cliff. What's going on, Cliff? I'm glad you can make it to this webinar. That's awesome. Welcome, welcome. Alright, so let's see. Let's plot this. So again, how I plot my key levels when I'm using volume profile is I'll sort of mark the top of the volume profile, like where the biggest areas, the highest volume nodes are, and then the bottom. So this bottom was sort of sketchy. could be here. I definitely wouldn't do this one. This one's way too low. So like this one, I would maybe do like here or here. Regardless if I do here or here, if you guys are looking to the right, you see the reaction we had. This still worked as a very strong area of interest and key level. And again, this is a support and resistance now. Everything ties into each other when we're talking about trading. I could teach you volume profile, but what you're doing is you're learning how to find support and resistance, but with a trading tool. Again, supply and demand, same thing. Support and resistance could be seen as a form of supply and demand. It's support if demand is exceeding supply, and it's resistance if supply is exceeding demand. All right, back to our regularly scheduled program of volume profile. Here is another key level we can mark, and another great thing to do when you're marking your key levels, guys, is look left. You want to see if historically this was an area or a key level that held up in the past. If I'm marking, it's hard to find a high volume node without some sort of reaction or some sort of hold, because that's the great thing about it, is it has all this volume, it's got all these volume shelves. Now this might be a little hard, the NASDAQ, because we got one here, one here, one here, one here. They're sort of all over the place. Now what you could do for this is you could mark out like the top and the bottom. You can mark out the really high the high volume ones, right? You could do this right here, and maybe let's say make it green for the high volume ones. And we'll do that green. And then you could remind yourself, or you could even label these POC, point of control, or high volume node, HVN, guys. Remember that, and you can mark it HVN, LVN, and if there's maybe a low value node right here, and you want to remember that, okay, there's like an empty volume shelf. There's no volume shelf here. I want to go long if we break into it. We could do that. You could use it just like that. I wouldn't recommend using it for the empties. What I would recommend is using it for the reversals and for the reactions of these key levels and for the high volume nodes, not the low volume nodes. High volume is important. It's something that the banks can't hide, and it's something that we could take advantage of. So again, guys, here, right here, I see this clump of high volume nodes that's way bigger than these. Like, these all stop right here. They stop right here. This goes all the way there. So I would maybe mark this out, right, and look left. Check out what the left is doing, right, and we had a hard rejection. This was a strong area of interest. It was resistance. It was support, resistance, resistance, and now we're back over here. We're using it as a support. Welcome everybody. So you can use volume profile to spot stop loss? Absolutely. So whenever I'm going over any type of trading strategy or any type of tool, however I'm explaining it can almost always be put into a trading style, into an entry, into an exit, into a target, into a stop loss. But that all comes with playing the reaction of the chart and of the move. So let's say you said, can you place a stop loss? So let's say I had a high volume node, right? Let's say that I had, let's get rid of this one because this is just a weird solo one, and let's keep doing what I know works for me. Because guys, once you get something that works for you, you don't want to mess with it. If it works for you, keep doing it. The market will always be changing, so you do have to adjust your trading style, but it doesn't mean you have to change it entirely. What do you mention about high, low? What did you mention about? Oh, so Frank, I was just mentioning how you would rather trade the reaction off of a high volume node than thinking because there's low volume that we could just run through it. Because a lot of times the high volume nodes are the ones we have trouble with and reject. So if you sort of flipped that idea, you would think the low volume nodes are the areas where we could just push right through. And it's really not how it works. At that point, again, you're gambling, and you don't want to be gambling when you trade. You want to take anticipated trades, you want to take highly anticipated and smart trades, calculated moves, calculated risk, calculated reward. When we trade and when we take our time to learn and join these webinars, you're taking time out of your day to do something the 90% of retail traders aren't doing. You're taking the time to learn. You're taking the time to listen to somebody explain a tool that could potentially help you. And that's huge. The minute you stop trying to learn, the minute you get lazy with it when you're learning to trade, is when it all just goes downhill and gets worse and worse. You got to stay determined. You got to stay dedicated. And you got to keep showing up. And I appreciate you all for joining me today, because that means you guys showed up. You did what those others aren't doing. Keep at it and keep showing up. So back to this volume node, what I would look for is I would look for some sort of reaction on the higher time frame, like this. So we had this reaction, and I could have entered here because this was creating a higher low. Could have entered here with the stop loss right at these previous highs. So that way, when you enter here and you could target, like let's say you wanted to target here for a daily demand, right? Because now we're putting all of our tools together. We're using volume profile to look for this rejection. We're using demand to look for our target. And now we also used the pivots, which will be the swing high, as our stop. So we have our stop, our target, and our entry. And that's what you need when creating plans. You don't want to get in blind. You want to take it calculated. You want to be smart. You want to know what area you're entering before the chart gets there. You want to create plans. And again, sometimes our plans don't work out, and that's okay, because that's why they're a plan. You'd rather the plan not work out and be sitting cash, or you'd rather the plan work out and you miss the trade and you be sitting cash, than it not working out, but you wanted to make sure you were in it just in case, and then it lost and you lost money. So this is another example. This is an example right here of getting in at the higher low off of that key level with the volume profile. Then we have the same exact example right here. We made a higher high based off of these highs, but then we created a higher low based off of this high. So we rejected this, we retested. Once we make those higher lows, guys, that's what I mean when I say I want to retest before we go lower. So we started selling off, and I could have been like, oh, I missed it, blah, blah, blah. But no, I didn't miss it. If it's a strong move, it's going to have a pullback before it gives me that real drop. If it's a strong move, it'll give me that pullback before it gives me the drop. Remember that, because it's got to grab that liquidity. When this went lower right here, when this went lower the first time, we see these wicks on the bottom. Retail's getting scared. Retail's saying, I don't know, I don't want to short it, blah, blah, blah. Then they get long once they start seeing green. Lower high. Yeah, what was I saying? Higher low? I'm sorry, guys. Lower highs. Lower highs. This is a lower high compared to this high. Lower high compared to this high. Thank you, Cliff, for always catching me when I mess that up. As Cliff knows for being a member for a while, I tend to switch those around. But as long as you guys understand what I mean. Yes, absolutely. I'm happy to help you guys. Happy to be here. This is a great community. We're all about helping each other. Alright, let's get back into the swing of things. So let's say I wanted to again mark this node and this right here we already had. So this is that range. And again, guys, once you start spotting support and resistance and VP is volume profile, in case you don't want to say volume profile every time. When you're using VP and creating support and resistance and key levels with it, it gives you the range. Whenever we're creating some sort of support and resistance, supply and demand, key levels, we're giving ourselves a range to play. So when we do that, we don't want to be trading in the middle of the range. We want to be trading off the reaction of the top of the range, of the bottom of the range. Those are the trades we take, because when we do play those trades, we're getting in at the bottom. We're getting in at the top. And that's something not a lot of traders can say. Same with supply and demand. If you're looking at a higher time frame supply and demand zone, it could potentially help you get in at the top or bottom. And that's really great, because that'll help you. Like, look, let's see this higher low. Now, you wouldn't have got in at the top here, no. But you got in with the extra confirmation that you needed. Now, even if you don't get in right away, right here off the key level and the failed higher high, this is a failed higher high because it created a higher low. Even if you didn't get in right here, because obviously getting in at the highs is a hard thing to do, you could have got in right here and put your stop right here. And again, still having a strong risk reward because you're getting in here and you're looking to make a big move on this. This would be a swing trade on the NASDAQ. Can you zoom into that retest you were explaining? Yes, absolutely. So there were two retests I was looking at that were great examples. And that's going to be this one right here. Let me throw here to here and here to here. And what I'm looking at there is market context. I have my key level from the volume profile. Now what am I doing? I'm adding context. I'm adding swing highs, swing lows. I'm not adding supply and demand on this one. I'm just doing volume profile. Did you already show how to set up the No, I did not show up how to set it up on TOS yet. I'll do that a little towards the end. But, so this would be, I would use swing highs. This is a lower high compared to this high. Enter here, stop loss right here. And as you see, guys, the NQ sort of went stop hunting on this one. It looks like we ticked. You see this high right here? This is another great example of why we're patient and why we don't chase. This high right here, anybody who thought they got in at the highs and shorted it and put their stop right here, look at this. This high wicked out of it for, what's the high of this candle? 6875. So, right, alright, it was a few more points than a tick because we're looking at the daily. But it wicked it, it came down and it kept going lower. So anybody who was short this whole run down, they were really in the money. They were enjoying this drop, came back up. Now they're stopping out, they're scared, they're stopping out. And then what happens? The stock continues to go in their direction. What does that fuel? That fuels them getting angry, they're mad, they're chasing now, then they start shorting, then they get short over here, and then this is a green candle, and then they stop out. And then it's too much. Versus if you're patient and wait for the confirmation around these key areas, you're able to get in on a more secure entry and really extend your profit target and really, really get a good profit out of it. I've seen VP in TradingView that shows two colors. Oh yeah, the VP in TradingView that shows two colors is, it's like yellow and blue or something. I think that's actually what the thumbnail of this video is. I think I used it from TradingView. I think it's just buying, selling volume. Personally, you would still use those as, again, high volume nodes, low volume nodes, so the volume nodes that extend further than the other ones are higher than the ones that don't. So let me just get those off. Alright, does anybody have any questions before I continue? Is everybody alright? Does your VP show your exits too? Yeah, you could use VP for exits. So, again, you would really, when we're finding these key levels, you could use it as an exit, like as a target. So like, let's say you wanted to target this key level, right? And we could have been in long once we broke this volume, right? Once we broke this volume node, we broke it, we came down here, and we just fell, right? So we broke it here, we retested. We didn't retest it completely, but we came back to this zone before we made the real move. Remember, there will always be that pullback to grab this liquidity, because first off, this pump was a liquidity grab because people are chasing it long. Now they're getting stopped out. Now it's going long again. So now they're not only stopping out, but now they're fueling the move higher by chasing. Now, I was looking at the low volume zones. No, Cliff, you definitely want to be looking at the large volume nodes. Does consolidation mean the same as accumulation? Yes, consolidation and accumulation are about the same. It's when a stock is sort of in a very tight range, expecting some sort of break. And guys, I do appreciate if you hit that like button. It's the last time I'm gonna ask, I promise. What time frame on VP do you recommend for intraday trading? So that's a great question. Let's look into some smaller time frames and really see what's going on. So personally, I would probably want to do minimum 5 days, because the reason for that is so you could at least look a week back, right? So we're looking at, this is a strong volume shelf, and this volume shelf, this right here would have printed while price was printing. So when we came down over here, you would have seen that this was a high area with volume, and this could have been an area where you could have entered long, put your stop at the previous lows, and let this winner run. And then maybe target, look, this volume node right here, we did go above and past it, but it was still a strong area that, look, then acted as a resistance, acted as support, and then it's now an area of consolidation, accumulation, whatever you want to call it. The stock is in a tight range, it's grabbing liquidity, Don't want to be trading in tight ranges, guys. So this would be, so yeah, I would say a 5-day, I guess on the 15-minute. You could do the 30-day as well. Let's see, let's do the 30 on the 30. And again, guys, take a look at where these volume profiles, where this POC, point of control, is right now. So let's mark this as a POC. POC on the 5-day, right? And that way, we know when we come to this area, we know what we're dealing with, what we're working with. Now let's go to the 30-day, and let's go to the 30-minute. Now the time frame itself, like the 30-minute, 15-minute, that's not going to change so much of the volume profile. Let me see. It's more the time frame you're giving it. So like I'm looking back at 30 days now, we're going to look at 30 days historically of this volume. If I was looking at 15 days, it would look back at the past 15 trading days, and so on and so on. So let's take a look. This is the 30. So we saw this was the POC on the 5-day, right? So now we have the 30 is way down here, and that's a pretty strong area too. Because you see how we came up, it was resistance, we broke it, we consolidated, we failed, came back up, consolidated. All this consolidation, all this accumulation near these high volume shelves, all these POCs, all these high volume nodes, the consolidation that's forming is just the banks adding to their position, just the banks filling their positions, because they keep price there because that's where they want price. That's where they want to fill it. They're keeping it choppy to keep chopping out retail so they could keep filling their orders. Like let's say everybody over here who was going short, they were going long, right? But we did break lower, consolidated again, and came back up. Now again, this might be an area where if we didn't know we were in a bull market because retail is feeling, oh, well, we're in a bear market because the war and the news and the this and that and the inflation and all of this. But realistically, if we're looking at a year to date on NQ and ES, we're green. We're in a bull market. So you would look, a retail trader would look at this key level and say, all right, well, we're back near this area of interest. We're probably going to reject it. And we did get that rejection for a moment, right? We did. We started to sell off. But what we do, as smarter than retail traders, we created a higher low, right? This is a lower low. This is the higher low. And that would tell me that bulls are still in control. Even though we just sold off right here, retail saying sell off, sell off, sell off, they forget, when in doubt, you gotta zoom out and you gotta look back. We created this higher low off of this low, and we are going higher. Then we gapped up and we kept going. We just kept going. So this was another strong area of interest based off of volume profile. So we're going to mark that out on the 30-day. And then again, so with the volume profile, if you do intraday and you do mark it out like I'm showing right here, where you go to the 5-day, mark the 5-day POC, go to the 30-day POC, you're going to want to update those, I would say, pretty frequently. The 5-day, I would say, I would even try once a day on the 5-day or every few days. On the monthly, maybe once a month. 15 days, every 15 days, just to keep your zones fresh so you know where the strongest volume nodes are. And a lot of times, if we're in a ranging market, you might get the same 15-day POC as you did last time. So you might not have to change it so much. Or it could be historically a strong level. Like let's go back to the daily real quick. So like the top of this POC right here, this green level, this was a resistance, we broke it and it became support. So this would be a POC on the daily. Now let's say this was a smaller time frame, I would maybe even consider keeping this because it had 1, 2, 3, then 4 touches and 4 rejections. Had 3 rejections to the downside, and then what happened? Resistance flipped and it became support. Why does that happen? Because when support is broken, our brains, our psychology flips. Our psychology says, well, this was a strong area of interest. I missed my long position. I'm going to put a buy order there and wait for us to come back. And that's what will also move the stock higher. And what that is again, it's psychology. Trading is a lot of psychology. Whether you're talking about the discipline to follow your rules, the discipline to wait for your trade plan to work out, or the discipline to even just diamond hands it, hold longer, hold through this chop. If you got in at this POC long and you were okay for a swing trade, you're going to hold through this chop. You're going to put your stop at this previous low, and you're not going to get stopped out. And that's going to work really well in your favor. D-Ray says, can low volume nodes be viewed similarly as version POCs, aka there's potential for them to be blown through, making them less viable on the intraday basis? That's a pretty good question. So, could they be seen as... I wouldn't say so, because if it's low volume, I would say if anything, the higher volume nodes show more potential of being POCs. Because look at this volume node right here and this one. This one just needs a bit more volume to pump up and meet that standard, whereas this one would need a buttload of volume to push it all the way there. So again, I would really just not even look at the low volume ones. Mark your highs of the volume nodes, mark your points, the strong points of your volume nodes, and that'll help you out a lot. Thanks. Will POC and VP give the same point of interest as anchored VWAP for the same time frame? I don't know if it'll give you the exact. That's a great question, and it might. If you want, look into that and let me know. Keep me posted on that, because that's a great question. I was gonna say how what's great with the POC and volume profile is you could use it with things like VWAP. Because VWAP is a volume-weighted averaged price. This is another indicator that's based off of volume. What I just noticed right here, guys, is look at this, ready? We had the lower low, right? We had this long downtrend, we had this lower low, then we had a higher low, and another higher low. And this is all off of the bottom of this large area, this large high volume node. Again, I'm seeing this whole chunk of nodes as one node, so I mark them the top and the bottom, because under that there's no volume, above that there's very low volume. So that'll be my range of volume. We broke that and we continued for a strong trend. We held it over here and we stayed and we went to the top of the range. This would have been another area that you could have gotten long over here and really swung trade this and got in near the bottom. Like, imagine telling your friends or somebody that you trade with, oh yeah, I just got out my long position. I got in at 10,909 on NQ, while the lows are just like 100 points away, 200 points away. It'd be crazy. It would be something really great. Really gives you high probability areas of interest and areas where there have been reactions. And as traders, we have to trade that reaction. All right, let's see. Again, anybody got any other questions? You want me to cover anything? Let's see. Let's look at... I want to see... Right, okay, it's 5 day, 5 minute. You say that the lower volume, the less time the price will stay in that level. That's another good question. So you see, some of your questions, guys, and the reason I can't answer them is because a lot of them is something you would learn yourself through experience, and that's a lot of the stock market as well. I could teach you guys step for step how I trade, how I find my supply, how I find my demand, how I find my support, resistance, but yet you'll still find another way to change that style to fit you. Everybody is an individual in the stock market. We're all snowflakes. No two snowflakes are alike. My supply and demand is going to be different from your supply and demand. My support and resistance different from your support and resistance. Does that make mine better than yours or yours better than mine? No, it's all experience. If your levels are working out or what you're doing is working out, you keep doing that. You don't change it. When you're learning to trade, you go to these webinars, you talk to people, you find these courses, and you take bits and pieces. You know, somebody could teach you how to ride the 9, right? And then somebody else could teach you the 21 EMA, and then you could combine those and have two indicators. You could have VWAP, right? Some people like VWAP, some people like zones. It all depends on your trading style and what works for you, trial and error, and experience. That's all the stock market is. Experience, trial and error, and not giving up. And you really got to stay, not, I don't want to say consistent, because when we're learning, we're not consistent yet. But we have to be consistently learning. Now, consistently losing, doesn't mean you're losing. It means you're losing money, but it means you could be learning. If you're losing in the stock market, guys, I can't emphasize enough, stop taking trades, take a step back, and see what you're doing wrong. Review some trades. Where are you entering? Where are you exiting? Why are you entering? Why are you exiting? And once you start doing this more and more, you'll see similarities within your trades. You'll see, okay, well, every time I got short because ES was looking weak, it ended up pumping. So I'm going to stop going short when ES looks weak. And you're able to knock some of these setups and rules out of your playbook. So moving forward, you can work on things that will work for you, that do work for you. And that's, again, really what these webinars are for. These webinars aren't so you could copy my volume profile piece for piece, level for level. It's not so you could copy my supply and demand level for level. It's so you guys could learn the basics and the understanding of how the stock market works and how these strategies work as well. And I really do hope you guys get something out of it, because we put a lot into it. And again, I hope you guys enjoy. Alright, so let's see. I could, if you guys want to give me like a minute, I could try to type up some notes and throw them up on the screen for you. I just want to see. Question on the 1509 level that you call a demand zone on POC as opposed to support. 15096. 15096. What, oh, this one. Well, this one was more of a, this was more of a resistance, because right here we were resisting it, and then it was support. But my problem with this level is when we were breaking it, we were breaking it pretty deep. So I would then go to a higher time frame and say, okay, let's look at the 15-day on the 15-minute and see if there's a better POC over there, right? And now the POC is a little higher. So this one I would probably feel more comfortable with, and I would mark it right above where the volume profile starts. So I'd mark it right above, right over here, and I would unmark this one, remove drawing, and now let's look at how this one plays out, right? So it was a support. We broke it for a moment. We came back in. It was a liquidity grab. Whenever we break a range and we come back into it, you got to consider that as a liquidity grab. Now, sometimes what will happen is we'll break the range, we'll come retest, and we'll go long, right? And that's the type of play I'll look for. But sometimes when we fail to show that strength coming out, then we don't take that position, we don't lose, and we be patient. Now we could see over here, we created a lower high based off of these highs. This would have been a good entry to go short, right? And you could have targeted, you see this volume node right here would have been a good target, because it was also where we consolidated in this little range. All big ranges, guys, if you zoom in, I can guarantee you there are going to be little ranges within. And once you're able to see the big ranges, you could look into the smaller time frames and say, all right, let's play these little ranges and really get precise with these entries and exits. So you could have played this lower high right here, short, and you could have targeted way over here. That's about a 200-point drop on NQ. That's a nice move. The resolution of this histogram, bar thickness, does it matter? What does it tell us? It doesn't matter too much. It just tells you the area. So, like, again, because the price level is not sticking to it, it gives you like the 1463496, where, look, so you see over here, it does give you the price if you zoom in pretty well. So the bar thickness, I'm pretty sure some settings you could go into and change that. You can make it thinner, you can make it thicker, and so on and so on. But, so that would be a key level, key area, again. And now look right here, we created a higher high, right? Then we came down. Now instead of chasing this higher high, guys, because we would rather wait for a pullback and go up, we're going to wait. See, now we could have either entered here to go long and we would have stopped out, right? Because not every trade is going to work out perfectly. But what happened over here? We created a higher low compared to this low. So this would have been the liquidity grab, a fake out. We failed to break out of this. We came back lower, but we were chopping lower. What I look for, guys, when we're going in a certain direction is I'm looking for strength. I'm looking for follow through. This drop right here, very little wicks, very fast drop. This is a strong move lower. Whereas if I'm looking at something like this right here, this move lower, this is not a strong move lower. We dropped, we bounced, we dropped, we bounced, we dropped, we bounced. This is not a strong move over. Sellers do not have full control of this. And a lot of times when we have an issue, an imbalance of buyers and sellers, a lot of times we'll get that reversal eventually. But we can't be anticipating it. We can't be getting in every time we see a green candle. We have to be patient. We have to wait for this to form. And then maybe we enter right over here, right? And put your stop at previous low. And you could target the next point of control or the next VWAP, supply demand. Again, guys, we're teaching you guys so many different strategies and so many different ways to read the market that aren't solely based off of indicators. What I try to teach is how to read a naked chart, how to read. Now, volume profile, sure, it's an indicator, but it's not a moving average. It's not a, what do they call, not a delayed indicator, but pretty much a delayed indicator. A moving average does not measure anything relative other than how much the ATR has been on the candles and the moves on the candles. Dynamic indicator, lagging, that's it. Thank you, Jim. Yes, it's a lagging indicator. RSI, lagging indicator. MACD, lagging indicator. Volume profile, VWAP, not lagging indicators. Those are measured with volume. Volume moves the market. Moving averages don't move the market, guys. We might bounce off the 9 here and there or the 5, but they don't move the market. They just don't. Heard them talk about missed daily pivots. What does that mean? Missed daily pivots. What do you guys mean by that? Like, I'm just gonna scroll up in the comments real quick, guys. Just give me one moment if you don't mind hitting that like button one more time. All right, now I'm done asking. Not sure. Who was asking about pivots before, guys? Let's see. All right, no worries. If you guys do come up with, heard them talk about missed daily pivots. What does that mean? Not sure. Might not be relevant. Yeah, I'm not too sure. I just use the pivots as higher highs, higher lows, things like that. Those are the type of pivots I look for. So, like, here's some good clean market structure saying that we're going higher, is we're creating a higher high, a higher high, a higher high, a higher low, a higher low, higher low, higher low. So when I see something like this on the larger time frame and I'm talking to people in our group, talking to members of our community, I'm telling them, due to market conditions, I cannot go short. We've been, in market context, we've been creating higher highs and higher lows. That is a bullish market. I can't fight that trend. Now, if I wanted to go to the 1 hour, I could also just make sure, because that was the 15 minute. I could say, all right, well, what's the 1 hour look like? Are we also doing anything good? What's going on? Well, the 1 hour is also doing the same thing. It looks like, yep, we held this low, so we created a higher low from here, created a higher low, higher low, higher lows, and again, higher high, higher high, higher high, higher high. We did create a higher low here for a moment, and this could have been maybe possibly a divergence, and that's something I'll have a webinar on soon as well, guys. That'll be a fun one. Got so many topics to go over with you guys. This is going to be a fun summer. Summer of trading and summer of learning, guys. This is going to be fun. I'm excited. All right, so let's see. We got some good prices, some good points of control, good areas of interest. And again, guys, those pivots, those higher highs, those lower lows, those are the basics of giving you that market context. If you don't know what direction we're going in and you're on the 5 minute, go to the 15 minute. If you don't know what direction we're going in on the 15 minute, go to the 30, go to the hourly, go to the daily. The more you zoom out, the clearer the picture will be. Because again, like I mentioned before, the bigger the ranges, once you zoom into the smaller time frames, you'll find smaller ranges. So when we find these daily ranges, right here. So this is a huge daily range, and if we were swing traders, we could have been buying at the low and targeting the high, and that would have been, oh my goodness, guys, that would have been a, oh come on now, 2,700 point move on Nasdaq. Get out of here, that's crazy. It sounds like a movie, guys. I don't want to be selling you guys anything fake here, but I mean, this is realistically something you could do. This is it's as crazy as it sounds. We created a higher low and then another higher low at this pivot level, and that would have given you that clue to take this along. And unless you're paper handing it and you're just cutting it, or maybe you want to scalp it because you're more comfortable being in and out of positions, you could do that too. But getting in over here would have been near the low, and that would have been an amazing entry. What's the lowest range you might consider valid when looking at lower time frames? So, D-Ray, I'm glad you asked this question. It's a good question. I personally trade on the 5 and the 15-minute time frame, and what I do on the 5 and 15 is I'll look for the same price action we're talking about right now. I'll look for a higher low on the 15 or a higher low on the 5 and take that short. And I do that with my supply and demand as well. So sometimes we'll get a higher high, which again is a bullish move, but we'll get a higher high inside a supply that retail might not be aware of, that we could potentially see a big reversal because retail was chasing and filling all the institutions' short orders. So it's a lot to consider when trading, but we really do have to try to, in simpler terms, simplify it for ourselves. Learn the basics of supply demand, learn the basics of support and resistance. Keep it as basic to yourself as possible because you don't want to become overwhelmed. Once you become overwhelmed, you can't learn, you can't think straight, you can't trade right. You gotta be 100% mentally to trade properly, guys. If you wake up sick, don't trade. If you got a stomachache, don't trade. Yep, you get it. D-Ray gets it. It's because it's as crazy as it is. You know, you could have a trading strategy that's 90% of the time, but if you're not in the right mind, you got a stomachache, you're not feeling good, your body's not good, you can't operate right. You can't do things to your 100% capacity, and that's going to throw off your trading. And once you do that, you start feeling like a loser. You start feeling like you're doing something wrong again. Meanwhile, all you did was trade while you weren't feeling good. And that could have been prevented by just knowing, I don't feel good, I'm going to stay disciplined and not trade. And that's a great thing, guys. Discipline is huge. Psychology is huge. I'll do a webinar on psychology one of these days. That'll be a good one. Alright, so high volume nodes. Alright, I am going to, I do have some notes up, so I will do some notes for you guys. Just like definitions, I guess. Let's put this one there. Point of control. We got value area. I'm not a big fan of value area, but I do like the high volume node, low volume nodes. So we'll put that there, and I'll make that a little bigger for y'all. Okay, there's that in case anybody does want to take a screenshot, so you have that. I'm just, you know what it is, I keep my notes in my phone, like through iCloud, guys, so I keep it on a separate screen in case I gotta look back. Just making sure there's anything else I could drop for you guys. Here's some, do another text note. I'll put the time frames in there too. Where do I look to see the Alright, volume profile for intraday and scalping. We'll look at the 5 to 30 day. And for swing trading, we'll look at just like the yearly, guys. So look at the yearly. Make this bigger. And I could start doing this more on the webinars, guys, giving you guys notes and stuff. I'm not sure if you guys are taking notes or what. It is good. Again, guys, this is going to be recorded as well, so you could look back on it. We do have the supply and demand webinar from 2 weeks ago and the support and resistance one as well, also in our webinar section. It's great. It's really good that you guys are doing this on the weekend as well, taking your time to really go the extra mile and learn. Because a lot of people be like, oh, well, it's the weekend, I'm going to relax, blah, blah, blah. But if we're not where we want to be yet comfortably trade-wise, good for you for taking the weekend to learn. That's why I'm doing this on the weekend, because I know a lot of people who might work or might not be able to come on the weekdays. Made sure, all right, as much as I don't want to work on the weekend, I still feel like it bring a lot of value to you guys. So that's why I do what I do here. So let's see. Yeah, activate that. Move that a little lower so you guys know it's separate. All right. Guys, I do think I'm going to wrap it up in just a few moments. Absolutely, Victoria, I'm happy to do what I do. I'm happy to be involved in such a strong and happy and just a fulfilling community that wants to help each other succeed. It's really, really great, guys. So with that being said, happy trading. Do you guys have any other follow-up, any other last-minute questions that I could go over? And again, before you do leave, I would appreciate it if you hit the like button, if you haven't yet. I'm sure a lot of you have already. Alright, if that is it and there are no more questions, I wish you all a great weekend. Don't forget, Monday, the stock market is closed for the holiday. Have a great 3-day weekend, and take care. And, well, yeah, happy trading, y'all.